Good morning, everybody. Hey, welcome to the 17th of January as we come to the first day of the week of trading after yesterday's holiday. We'll look to see how well things are going or how well they're not going in just a few moments when we hop on the radio. Before we do that, though, let's remember that, in the world we live, there are so many things that you and I just cannot control. We can't control inflation. We can't control what's happening in Russia, Ukraine. We can't even can control what's happening in Washington, D.C. But guess what? You can control how much risk you have in your current portfolio. But you have to know what that risk is and whether it lines up perfectly with the amount of risk you should have. Maybe you don't have enough risk. Maybe you have too much risk. You need to know. Give us a call at 863-382-0037, because that's what our core retirement design helps you do. Helps you design the retirement you would love to have and helps you put together an analysis of your current portfolio to make sure you have the right amount of risk. Again, 863-382-0037. Hey, looking forward to our conversation and our talk today with what's happening in the news. Hold on just a second.
Light FM, there's Uncle Cracker. It's Doug Reese sitting in for Morning Dave on this Tuesday morning, and it's that time of the day where we're going to head on out and check in with Phillip Statler from Statler Financial Services and get an update on our market and see what's happening. Hey, Phillip, how are you today?
Hey, good morning, Doug. Doing well today. I almost said Dave. I had to get the gears rolling the right direction there.
I'll have to get my deep voice like Dave.
So, hey, it is, well, I know we talked a little bit yesterday, but I thought I'd start from Friday again for a lot of folks heading back to work today that had yesterday off. So we did have not a bad day on Friday. So let's kind of start there before we look at what's happening today.
Okay.
And so we got everything came up green on Friday, which we always like that when that happens. We had the S&P 500 up about 0.4%, almost $16. The Dow Jones Industrial 30 up 0.33%, that's $112. And the NASDAQ up 0.7%, $78. So everything firmly in the green on Friday. I wish I could say that that's what I'm seeing today, but it's unfortunately not what we're seeing today. And we'll talk about that more here in just a few minutes. Let's start with what little bit of economic news we have coming out today. And that's going to be the Empire State Manufacturing Index. Now, that's one of those indexes that doesn't really matter until it does. And it's in the forefront today because it's the only thing out there economically that is that's really hitting the news wire. And it was expected. Well, let's start. Last month, it was down 11.2%, down to 11.2 was what it was down. And let's just face it, Doug, negative is not good. Positive is good. The expectation was that it would come in at a -7, but it came in at over a -30. I think it was -34. And so that is a huge miss when it comes to what that manufacturing index does. Now, each region has different things that make that up. We're not sure exactly what the details are within that index, but what we do know is which way it's going, and which way it's going is the wrong direction. It is going down and not up. Now that's bad for the economy. That's probably good in light of what the Fed wants to do, and that's continue to raise interest rates. So that's kind of what we're looking at there from an economic standpoint. Now, tomorrow, Wednesday, a big day. We got retail sales and producer price index. So that's going to be a huge number to see how that did for the month of December with Christmas and everything. So we're looking forward to see what those numbers look like. Talking about interest rates, let's look at the spread between the 2-year and the 30-year still, upside down there. We've got the 2-year Treasury yielding 4.23%, the 30-year still at 3.67%. So still about the same spread we've been seeing there going forward. The in the marketplace, we talked about a couple of banks reported. Everything else is kind of downgrades and upgrades. But the two main banks that reported, Goldman Sachs, Morgan Stanley, kind of two different stories though. Goldman Sachs reported and they had a huge miss. They were expected to come in at like $5.48 a share. They only made $3.32 a share. Expected revenue was a miss as well. And so they're trading down this morning. There it is, about almost getting close to 3% now. So heading down. Now, let's face it, they were getting really close to their 52-week high. So some retreat is not necessarily a bad thing here, but definitely they missed. Now, one of the other things that I did see, and one of my other reports and tip sheets I was looking at, if I can find it again, that they increased their loan loss revenue substantially. They increased their loan loss provision by 183%. So that could be the underlying reason that their numbers are so far off. But you have to wonder if they're making those provisions for loan losses, are other financial institutions and banks going to be doing the same thing? You know, Goldman did go into a new area of credit cards this last year. And so we're seeing that may be part of what we're seeing continue to put some pressure on their bottom line. The other bank that reported was Morgan Stanley. Morgan Stanley, they beat across the board. Their revenue came in at $12.75 billion compared to $12.6 billion expected. Their earnings came in at $1.31. They were expected, I think, at $1.26. So some good news from Morgan Stanley, and they're up this morning about almost 2.2% before we get trading today. And the other thing we want to mention is there's still not a lot of earnings reports. This was still really early in the earnings season, but I do have a sheet that kind of shows me all the regional banks, and it's kind of a mixed bag. We've got some regional banks that have missed on earnings, some that have beat on earnings. So not a clear winner or loser here. The other thing we have coming out, I think tonight, is United Airlines comes out, so we'll have some travel. JB Hunt, I think, comes out tonight or tomorrow morning, and that will be a good indicator too, because that's transportation, and so that'll tell us how things are moving across the country as we get going. There's not a whole lot else happening right now until, well, let me just mention this. We're seeing a lot of headlines now. When we start seeing these headlines, it gets a little nerve-wracking, because you're probably seeing them too as you look at different financial reports. You know, are we in a bull market? Is this bull market going to last? Is this the one? We continue to see that because since January 1st, the markets have rebounded nicely. But the question we always look at is it a bull market, or is this just a leg up before we head back down again in this bear market? We don't know. It's one of those things that we have to be cautious about, continue to look at, and continue to monitor really and truly what's happening across everything. And as we get more and more numbers in, I think that that's going to continue to put some pressure on some of these indexes. I'm looking at the retail sales expected for tomorrow. We're expecting to be down 1%, which makes sense with inflation the way it is. But if it comes in way less than that, then that's going to be impactful for the markets tomorrow. So before we get started today, we've got some red ink pretty much across the board when it comes to the stock indexes. The Dow is down to 0.4%, almost $140. The S&P 500 is down almost 1/3%. That's almost $11. The NASDAQ 100 down 1/3, and that's about $38. So everything on the stock indexes are heading south right now. On the other side of the coin, gold and silver aren't helping any either. Silver down 0.5%, gold down 1/3 off its 9-month high. And so we continue to watch that. And crude oil definitely heading the wrong direction. I noticed this morning coming in, gas prices bounced about 13 cents a gallon. So we got crude oil up 0.75% to $80.70 a barrel. Across the pond, we've got a couple things in Europe. It's kind of a mixed bag right now. The DAX is barely green. We got the FTSE down a little bit. The rest of them down just a little bit. Asia is a mixed bag as well. The Nikkei is bouncing back up off of that low start yesterday, and everything else kind of in the red there. Hey folks, listen, this is the beginning of a new year. And if you're thinking about retiring in the next 5 years, then I've got an opportunity for you. Go to our website, statlerfinancial.com. We're doing some workshops coming up next week, Tuesday and Thursday. Would love to have you there. If you're thinking about retiring in the next 5 years, this could be impactful for you. Go to our website, statlerfinancial.com. There's a page there where you can register for those. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730 and 95.3 FM.
All right, Phil. Thanks for the update. Hope you have a great day, and we will talk to you again tomorrow, okay?
All right. Sounds good, Doug. Thanks, man.
All right.
Folks, remember, you have an opportunity to schedule a free 30-minute phone consultation to see if our core retirement design can help you design the retirement you always dreamed of. Give us a call at 863-382-0037. Love to have a conversation with you to make sure you're on the right track for the retirement you always dreamed of. Hey, until tomorrow, have a great day. Thanks now.